Today is August 27th and it's 10:57 p.m. Eastern Time. And I'm looking at the weekly chart for Virgin Galactic, ticker symbol SPCE, which closed Friday at $26.05, and it was up 60 cents for the day. With the end of August and Monday being September, I was looking at this chart. It was a quiet Friday night, so I thought, let me just start preparing for some potential trades to consider going into next week, into a new month. So what I did was I backed out, and I'm looking at the weekly chart, and the first thing I did was identify a local support resistance level of $19.39. So looking at the weekly chart, you can see that price gapped down below this back in March of last year. And since falling, price has been having a difficult time getting over this price level. I mean, it briefly did so back in July through August before coming right back down. So then other attempts to get above it was made. So here's the first attempt. Well, this would be the first attempt, second attempt, third attempt. The fourth attempt was very successful because from here, it went from $19 all the way up to $62. And this all happened from November to February. So it's a span of 4 months approximately before coming all the way back down to the 1939 level. And of course, makes another run up, and then here it is again. So that was the whole life cycle of this stock in about 2 minutes. So moving forward, going into September, what I did was I identified the next level of support or resistance as 2638. So same thing here. This price level was resistance over here. Somewhat of some resistance mostly over here during this time period and in the past 2 weeks. So price has been trying to get above it. And the third price level I identified was, or is, 36. So same story. So this price level was resistance here, 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 over here, and sporadically over in this time frame. So these are the most significant price levels in the short-term period. So what I also identified was that I think this really jumped out at me is that if I place this channel right about here, so at this point, so this is the top channel. So going up, this would be resistance, right? Because here price couldn't get above it, and it peaked over it for 2 weeks maybe before coming right back down, and then tried getting up again, which it did. But now at this point, this resistance was now support, right, for these 2 weeks over here, and with support here on its way down back in February before ultimately falling through it. And then when price tried to get above it, it was rejected twice before coming all the way back down. And this level is now support, right? So this channel, so this is the support level for this channel because it's supporting here and it's supporting here. And what really stands out is this area right here where we are going into next week. This is a wedge. This is a wedge pattern, right? So price is squeezing slowly and price is getting narrower. And ultimately, if this support level is valid, which I believe it is, price is going to break towards the upside. And we might see something similar to that, what happened here, because here's the wedge pattern here as well. And it gapped up. So there's all of this, right? Within a 2-week period, it went from 1643 to as high as 34, because from this area here, all this energy just got built up and made a huge push through 2 support levels or resistance levels, this one and this one, and really 3, right? So because price just kept on going straight up. So it's unfortunate I didn't see this set up earlier when the market was open. Otherwise I would have picked up a couple of contracts going into Monday, but hopefully the market will have a slow open and wouldn't impact the price too much, where I could just go in and consider maybe picking up a few contracts. So now that this has been identified, I'm anticipating that price would ultimately reach $33 resistance level. So if I toggle down to the daily time frame, right? So this is where price is right now. So price has just been trying to get above it, right? Trying to get above it, and it's going to keep ranging, but ultimately it's gonna start moving all the way up. I mean, up, right? So from this layout for Thinkorswim, these red hash lines represents expiration Fridays for option contracts. So the next expiration Friday is September 17th, and subsequent to that, the next one is October 15th. So from this review, I would be anticipating, again, push towards the upside above 33, at least towards 33. And I want to give myself time for the contracts as well as the premium to not be impacted too much because of time decay. So I want to give myself the opportunity for at least October. I mean, I could be aggressive and say, yeah, it'll hit 33 by September 17th. It could, right? So, but just a conservative approach, I would consider the October 15th. So I just want to take a look at what those prices are. So if I was looking at the September 17th 33 strike, I would toggle over. So here's September 17th. And if I open this page up, so the 32 looks appealing at 42 cents. Tempting, very tempting, because 42 cents per contract. So, so these contracts, September 17th, they expire in 21 days, literally 3 weeks. And if the price does go in my direction, as well as time, because time is also a variable I need to factor in when dealing with options. So 32, so it's 42 cents, right? So let me just bust out the calculator here. So if it's 42 cents, and each contract represents 100 shares of the underlying security, each contract is worth $42. So if I pick up one contract, right, at the 32 strike, and hypothetically, if price does meet my strike, it would be here under in the money section where it would be $1.80. So that would be equal to $180 minus 42. So that would be a profit of $138 approximately per contract. So if I pick up, let's say, 10 contracts, that would be a $1,400 trade in 3 weeks. So that's one way. So the other one was October 15th. 32 would be $1.26 or $126. So they're still reasonable. I mean, this contract only went up by 9 cents, even though the price shot up to 60 cents today. The premium only went up 9 cents per contract. So this was approximately $1.12 when the day started. And if I was to pick up the 32, just want to see where to break even. So the break even is right here at 33.26. So 33.26, it's still below the resistance level, so that would essentially be in the money. So something to think about, but in the longer time frame, it's my perspective that price is ultimately going to go above 33. It may end up in the year, by year end, somewhere up here, right? Because if the trend, if this is still a valid trend channel, right, price is just going to keep going up, up, up. I mean, it might not straddle this bottom, so it'll probably just work its way towards the center. So what I mean by center is that if I quickly place a pitchfork, right, and let me adjust this so this thing, so the channels line up. Right, so price would ride along the support level here, and as price is going up, it's going to want to stair step each level here. So it's probably going to start from here, then work its way towards the 25% or 23%, and then ultimately try to get above this 50% yellow, right? And so at this point, right, so if it just keeps going this way based on this trajectory, come December, we're looking at approximately $48, right? So, but then again, you know, the market's, it's unpredictable, but, you know, but based on the information I have and based on this assessment, it's something that I'm heavily considering. So until, you know, my next update, I'll do another status check on Space or Virgin Galactic, maybe next Wednesday, next Thursday. So this way, as the days progress, so let's say, you know, maybe by September 8th, it would have made that move by then. So until then, more to follow.